now for your Money Watch. There are not a lot of likes when it comes to Facebook's major stock plunge this past week after the social media giant announced its second quarter results. Joining us now is Bert, the Oracle of Orlando. Joe, good morning. Good to see you.
You too.
Let's talk about these stunning numbers. Facebook stock tumbling more than 20%. Put this into perspective. Just how big of a plunge is this?
Well, it was the largest plunge in U.S. history.
Wow.
The plunge was equivalent to the value, the combined values of American Express, CVS, Lockheed Martin, combined values.
Oh my goodness.
So that's pretty big.
Okay.
Or Ford Motor and General Motors combined. That's how big the drop was.
Well, let's talk about the Facebook executive saying the company expects a significant slowdown in the wake of this, sort of a course correction, and other critics saying the lax rules over the years have sort of led to this Facebook meltdown. That's
what triggered it. First of all, their second quarter earnings were down, and they came out and said, well, you can expect reduced revenues going forward. And I think this goes back to March when the Cambridge Analytics deal came out, when Republicans were using the data to target. And really, if you look at what Facebook is all about, they sell advertising. You know, Facebook got started in 2002 in the Harvard dormitory.
Right.
Winklevoss twins, the name might be familiar to you.
Of course.
And the idea was we're going to build a community. People get together and share ideas, share pictures, yada, yada, yada. It's a great idea. But what they have been able to do very effectively is to gather data about all their users, you and me, where we go, what we like, who we talk to, what we buy, where we live, what our net worth is, all that stuff. And that's very, very valuable to an advertiser because you can target market your advertising to them. And that's why their revenues were up, why they were doing so well. And then it hit the fan, you know, back in March. And now they have to change some of their privacy policies. They're changing their algorithms. They're being scrutinized by Congress. And people are becoming more sensitive about what they post on Facebook and even not using Facebook as much.
Yeah, fewer users, I know, is a big part of this whole. What does this mean for our money, our wallet? Let's say we've got some investments with regard to some of these social media giants, because Twitter also in this fold as well. What say you when it comes to this?
Well, first of all, you know what we call the social media giants?
What is it?
The FANGs.
This is fascinating.
Facebook, Apple, Netflix, and Google. We call them the FANGs. And they're a big part of the S&P 500 because their stocks have gone up. They're large capitalization. So if you own an index like the S&P 500, you probably took a hit, and you probably own it in somewhere in your 401k or IRA. There's no need to panic, but it's indicative of owning one particular stock. If you own, and this is a big risk. We say this all the time and time again. You need diversification. You know, people like to make the bet because you own that and you see it going up and you feel good about it, and yada, yada. And then when it takes a tumble like it did, it really has an impact. So, yes, it can affect you if you're focused on one particular kind of stock or one particular segment of the economy, like the FANGs. And that's why diversification is important.
So not as severe as maybe the internet crash that caused so much trouble early on, right?
No, this is really one specific sector that is being hit because of what we just said about the, you know, the privacy issues that are going on. And people are scrutinizing really what social media is all about. Twitter's taking a hit. Google, I don't know. You know, Google's, but they're all going to be looked at with more scrutiny because this privacy is more and more a bigger issue.
Very true.
But when you look at what their business model is, Andrea, their business model is to sell advertising. And to an advertiser, what you want is a target market. You know, running an ad in the newspaper, you kind of have an idea where the newspapers are delivered in that market. But when you can tell where somebody lives, what they buy, who they know, what their favorites are, where they travel, what they do, that's very, very important to an advertiser. And that's why they got all the revenue.
Jackpot of information.
You got it.
And it's valuable, too.
Very valuable.
Joe, good to see you. Where can people find you?
Just Google me 2 words, Joe Bert, B-E-R-T.
There you go. Great advice as always. Thank you, Joe.
Thanks for watching. If you enjoyed this video, click here to subscribe to our CFG channel.